All right, how is everyone doing? So let's break this trade down, starting as always with the daily time frame. All right, so what we have here, I think you guys remember that after the election, or I should say during the election, we had this 200 bit move right here. Absolutely massive drop to the downside. You can see it was more than 255 drop right here. Price completely broke below this weekly BPR, which was acting as a very sensitive area for quite a while. You can see that we had pretty nice rejections right here, and now price broke to the downside. So what we are basically expecting from daily time frame is to simply climb back into the weekly BPR, into the overlapping lower time frame PD race right here, bearish PD race, topped out, and eventually give us a continuation to the downside in the form of a lower time frame market maker sell model right here, this being the original consolidation, but the main is higher time frame drawn liquidity, the main liquidity pool, the magnitude area being this consolidation here. So I think you can instantly see that this trade to the upside, as it was a long trade, was completely against the higher time frame direction. So in other words, you can see that it was completely against the daily momentum. So it was a scalp position, complete in and out. We are simply assuming that for this daily continuation to take place, what we firstly need to see is for lower timeframes to get in sync with the higher timeframes. And for that to happen, what we need to see is for price to climb into the lower time frame, PD raise, the key areas, and what we have there. We will talk about the lower time frames more, of course, but what we have there is a very clear for our imbalance area, for our low that we want for price to reach before it eventually tops out and starts pushing to the downside. So this is what we are waiting for. So from the daily perspective, you can see that it was pretty much neutral, but more against the trade. Hence why when we have higher time frame in a neutral or slightly negative type of a situation, this is then automatically we switch to scalp trading environment. We focus on the nearest liquidity pools on the nearest levels. And this is exactly what we did today. So that's what comes to the daily time frame formation. Let's now drop to the lower time frames. So these are the analysis from today's London kill zone. You can see that we were expecting for price right after the near midnight open, give a bear trap. So you can see that this bear trap actually ended up happening, just that it didn't run fully this low resistance sell side liquidity into this parallel gap right here. But despite that, this bear trap happened on the 15-minute time frame. Price ran the buy side liquidity, gave a reaction, trapped a lot of early short sellers right here, ran some sell side liquidity there on execution time frames and 15-minute time frame, dropped right into the 15-minute bullish order block, and after that it started shifting to the upside right here, taking out the buy side liquidity and running right into the 4-hour fair value gap slow right here, which was our main draw on liquidity what comes to the short-term direction. So if we quickly go to the flower, you can see that we have all of this imbalance that formed during this expansion to the downside. But what we focused on is, of course, this level right here. The first imbalance is low, which is very perfectly aligning with the weekly BPR and the weekly BPR's consequent encroachment right here. So notice how well this consequent encroachment is aligning with the 4-hour bearish fair value gap slow here. So this whole point right here after price on the 15-minute gave us a bear trap and started shifting into bullish order flow right here on the 15-minute timeframes as well as the execution timeframes. This is where we went long right here after price ran some sell side into bullish pizza race. We targeted the high, of course, of this bear trap and this level right here, the liquid BPR's consequent encroachment, overlapping the 4-hour fair value gap slow. So we pretty much had two main draws on liquidity from the lower timeframes and execution timeframes point of view, which is, of course, again, as mentioned, just a scalp trading environment, just waiting for price to climb into this very clear and obvious area before we move to the sidelines, waiting to see if price is going to reverse and give us this market maker sell model towards the flow right here as original consolidation, and of course this massive sell side liquidity pool right here, this consolidation. So again, from 1 hour time frame point of view, what we were trading here was the buy side of the curve of a potential upcoming sell model right here. Once price tops out, and of course, if it does, and shifts lower, starts shifting into sell side of the curve, this is then, of course, we will start looking for day trades. And what I mean by that, we will start looking for bigger moves, not quick in and out positions, quickly banking partials, quickly removing stops and stuff like that. This is where we will start stretching our targets towards bigger levels. Here, of course, the original consolidation, as well as this massive sell-side liquidity pool right below. So with this move right here today, trading the buy side of the core of a potential sell model, he wanted to be very quick, very sharp with our executions management and everything else, trading towards these levels right here. From here, of course, higher time frames will get in sync with the lower time frames, because what we have now is clear momentum on the downside what comes to the higher time frames, very clear drawn liquidity. But for that to happen, we need it for price to fully trade into garish lower time frame PD raise, create some buy side of the curve right here, create some internal liquidity and stuff like that. And only then, once it shifts lower, then we will have full alignment to look for bigger day trades. So that's that. Let's now go to the 15-minute time frame right here. All right, so what we had here on the 15-minute time frame, if we would extract this whole development right here to the side, what we had here, notice that price ran buy side liquidity, and I'm talking about this liquidity right here of the PM window, this tiny equal highs right here. Then it ran highs again, and then it took lows. So what happened here was a very casual liquidity shakeout in the form of a bear trap. Price ran buy side liquidity right here, then drop lower, running sell side liquidity right here, interposing PD ray, which was this order block right here on the 15-minute time frame. After that 15-minute time frame, as well as execution time frames, switched into a very clear bullish order flow. So from that point, what we target is, of course, the bear traps high, the buy side liquidity right here, and the bigger magnet area that we had, which was weekly BPR's consequent encroachment, aligning with Wednesday's long on kill zone buy side liquidity, which is again for our fair value gaps low right here. So exactly as expected, right from the long on kill zone, what we wanted to see was execution time frame and 15-minute bear trap, trapping as many short sellers right here, but then switching into bullish order flow and taking all of them out and running right here into our lower time frame 90 area. What a lot of traders they're looking for once price ran this buy side liquidity once, twice, and broke below this low, what they started to look for, short positions right here. So obviously what happened, they were happy for a few minutes as price was consolidating here, pushing lower a little bit. But after that, when it switched into a very clear bullish order flow, here on the 15-minute time frame as well as on the execution time frames, this is then, of course, we are completely happy seeing what is taking place here, reading in between the lines, and obviously noticing that we are in the buy side of the curve of this upcoming lower time frame market maker sell model. And it doesn't particularly has to happen. We simply identified our short-term magnet area right here. He identified the bear trap right here, and they took advantage of this quick position of this small range right here. From the low that formed during the long on kill zone, after running the sell side liquidity into opposing pizza ray, hold the way towards the long on kill zone high and the low of the 4-hour fair value gap. So from a different perspective, what we had here was a London kill zone strong low and a very simple near kill zone continuation right here. And even though we were not expecting for a classic buy day to happen or something like that, because again, we were fully in scalp trading environment today, we still got served a very clear and very readable type of price delivery. Obviously readable for us, not for those who got caught with their pants down right here shorting the market and getting stopped out right after. Because one important thing that they forgot, that this high right here stopped around 9-10 pips below the fair value gap. And for that to happen, just a simple break below the low and a pullback towards opposing Peter raise is simply not enough. What we want to see from price when we had a potential fake high is a full shift in order flow, full sharp shift in delivery, from where we could be sure that price is actually pushing toward the sell side liquidity and we are entering sell program. Because in this case, it obviously wasn't that and we took advantage of this move. Let's now move to the execution timeframes. So in the live execution time last where we entered the trade, you saw my full analysis, you saw my full thought process when we removed risk, when we took partials, pretty much everything as price was going towards our targets. So we won't be talking much about that. Overall, what we had here was 8:30 a.m. news coming, so it's great that we managed to squeeze this position in. What I marked with this dashed line right here was 15 minutes before the 8:30 a.m. news. So at this point, if price would have not reached into our full targets, I would have manually closed my position. I'm not sure why target is right here. We had it slightly higher around here, just a couple pips below the 4-hour fair value gap slope. So from the 5-minute point of view, what I marked here was this liquidity pull that we obviously focused on, the bear trap right here. Price took out sell side liquidity right here, sell side liquidity here, eventually ran right into the bullish 15-minute order block, ran higher, took out this high here. We were not interested in longs at that point, but then we saw this SN2 take place, and after that noticed that price switch into bullish order flow. It rejected this fair value gap, and when it created another fair value gap, we already had clear order flow on the 15-minute confirmed as well. So this is their hour, right? We are fully on this long line kill zone high, and of course this magnet area right here. So when price created this fair value gap here on the 5-minute time frame, when it entered and started reacting to the upside, this is where we took our trades. This is where we entered our position right here, with stops simply covering this low right here and leaving some space because of spreads. In the lifetime lapse, you guys saw that once price started pushing towards the long run kill zone buy side liquidity right here, we were not doing much. We left the position as it was, and only when it started actually breaking down, this is when we removed the risk right here, but also leaving some space because noted that it created some sell side liquidity here. So this type of a move could have taken place. Price dropping lower, running this consolidation here into bullish order block right here, and then shooting to the target. So this was one of the reasons why we didn't fully remove our risk once price took out the London kill zone buy side liquidity. Now, what comes to partials, what we had here was the midpoint from the London kill zone buy side liquidity to the low of the 4-hour fair value gap, which was nicely aligning with the extension right here of minus 0.5. The long on kill zone buy side liquidity was simply too close for me to take any partials. So what I did again, once price broke out, we removed most of the risk right here. But I stayed patient all the way until price reached into this confluence zone right here. This is where we banked more than half of our profits. At this point, you obviously could have removed risk fully right here. So I was simply monitoring my position, but I still saw potential of price running right here, this sell side liquidity pool into the order block. So I simply left where it was. But again, after taking first partials, removing the risk completely would have not been a mistake, not even close, because again, we were in scalp trading environment. We were looking for a quick in and out position here. So on this position, you can see that we didn't get any drawdown right after the entry. It just took off right to our targets. So very nice way to close the week, because I doubt that we will see anything tomorrow. Obviously, it would be great for price to eventually top out and start pushing lower. What comes to our lower time frame market maker sell more, but of course, you must keep in mind that tomorrow is Friday, and very rarely we see price give clear price action on Fridays, especially what comes to classic sell days, classic buy days, PO3 days. Friday, same as Monday in itself, very often is just a scalp trading day. So what comes to the lower time frame model, there's a high chance probability that we will have to be patient all the way till Monday or Tuesday next week. So that is all what comes to this New York kill zone long position. I hope it was insightful. I hope you took away some value, and we will talk very soon. Take care, guys. Have a great day.